Great. Hi, everyone. Welcome to Finbox FinTech Course. It's one of the first webinars that we are doing. We're going to today be talking about the $350 billion opportunity in the MSME credit landscape, and going to talk to some very interesting guests on the panel. And I am Mayank Jain. I head marketing and content at Finbox. This webinar was envisaged to kind of bring out the best of the insights that we have gained from working in this industry over these years and figure out what are the best ways in which we can move the sector forward, move the innovation forward. So let me quickly introduce our guests today. We have Rajat and Kushal. Rajat is the CEO and co-founder at Finbox, and Kushal heads the credit product division at Vyapar app, which is one of the biggest MSME apps in the country. Welcome, Rajat and Kushal. Happy to have you guys here.
Hey, man. Thank you so much for having me.
Great. So Kushal, I would like to first jump in and start with you and, ask a little bit about what your perspective right now is on credit for MSMEs and, how far away are we from solving that problem and how big is that problem really of formal credit to MSMEs?
Okay. Hey, I'll just like to begin with, first of all, just breaking down the MSME piece, right? Because a lot of time we talk about MSMEs, I think, we are thinking about the nano and micro industries, right? So when I look at it, supposedly there are about 6 crore or so MSMEs out there, right? Now the access to finance is actually there, but it's there for SMEs who are based in one of those commercial cities and towns who have banking access and GST and a bunch of other data points and ways to assess those SMEs. The problem, the gap that we typically talk about when we talk about MSMEs is the one which is related on the informal side of things, which is your kirana stores, your wholesalers, your distributors, traders of all sorts, right? Wherein many of the times the business proofs or the banking data or many of the things are not established, and that's where most of these guys who pretty much each and every of them have a working capital requirement. Most of them, they don't have a very standard way to access capital. So I think in my head that is the problem of MSMEs that we are referring to, right? I mean, this problem was always there. I think fortunately for the last 5-6 years, things have improved. A lot of data points, a lot of footprint is getting created for many of these informal MSMEs as well. But I think there's still a lot of work in terms of setting defined processes, setting defined underwriting methodologies, and as much as those are concerned, to eventually cater to all sorts of requirements that this micro SMEs would also have. I think that's the one problem that Java would be very keen to solve for, because that's a very huge chunk of our user base per se as of today.
Great. I think this sounds very exciting for Vyapar and for your journey as well. Now we have heard from a platform. Let's hear from a lender. I think Arihant, welcome to the webinar. Arihant, guys, is head of data science at IIFL Finance. IIFL has been at the forefront of MSME lending as an NBFC, and they are one of the largest NBFCs in India, and they're doing some really innovative things. So Arihant, just want to get your quick 2-line perspective on how do you see the space evolving? How do you see your role as an NBFC in funding NBFCs and in MSMEs, and how do you see that coming together?
Yeah, sure. Thanks, Mayank. And I think you have rightly put in terms of the positioning of the MSME with respect to lender. And of course, I think this is a very great time to be in. A lot of things are evolving, specifically in the SME space. Even if we see overall the FinTech or lending space, a lot of things started evolving in last 2 years for SME. A lot of focus have been given to consumer lending earlier. But since last 1.5 year, there are a lot of fintechs, a lot of exciting work happening in the space to solve the difficult problem of credit for the SMEs. And in last 1 year, we have also done a lot of work with respect to SME lending in terms of underwriting capabilities, in terms of making credit accessible to different categories of SMEs. So yeah, I look that it's a very fantastic time ahead, specifically when we talk about the SME lending.
Sounds good. Got it. I would want to go to Rajat and want him to do a fact check on the industry and tell us, Rajat, we work a lot at Finbox. We work with a lot with lenders and both anchors. What is happening? What are the big gaps that you currently see also, which have proven to be very important?
Absolutely. I think both sides are equally important in solving the credit gap, which stands at about $360 billion according to varied estimates. And there is essentially a lot of movement in building digital products targeting these MSMEs now and then, which is enabling all these all of these sort of MSMEs to digitize their processes and of doing business. Vyapar, of course, is on the accounting side and sort of the invoicing side. It provides an operating system for the MSME to really sort of digitize its core processes of running the business. There are many such different sort of applications that have come up on mobile, on desktop, etc. And what that is doing is creating a digital footprint for these MSMEs, and be providing basically interfaces where credit can be surfaced, right, which is one of the most important pieces. There's a lot of innovation still left to be done in this space, where creating these in say multilingual ways, or simplifying these applications even more, and sort of sub-segmenting MSMEs, and sort of providing deeper solutions for sub-segments, etc. And on the lender side as well, as Arihant was mentioning, there's a lot of interest in doing digital lending to the MSMEs, and this is something that is getting solved and figured out as we speak. Over the last 1.5 years, a lot of innovation has happened, a lot of digitization has happened on the core infrastructure side, on the lender side as well. Risk appetite has, of course, markedly improved as more data has come through from platforms like Vyapar and sort of other MSME platforms, MSME or SMB apps as we call them. And now, of course, as our role, we play the role of infrastructure connecting both sides, and we are trying to make it as simple as possible for people to really build out these credit products and run these sort of credit businesses as efficiently as possible. There's a lot of innovation in our layer as well, from credit decisioning to sort of making it easy for platforms to adopt, and also to smoothen operations on the lender side. We are building a lot of different sub micro products for people to really build this so provide these MSMEs access to credit on these platforms fairly quickly. There's a lot of innovation on all of these layers that is left, and we are sort of moving at a very fast pace overall, and which is very exciting ultimately, which will eventually lead to MSMEs have to get various options at various touch points, on online apps, and from lenders such as IFL. So these are things that we are very, very optimistic about overall.
Great. I think Rajat, since you mentioned the smallest borrowers and the micro segment, this is the piece that is the most that is my favorite at least. There's a sachetized lending piece where you want to like talk to the smallest MSME borrower, like the guy who is running a kirana store in some tier 2, tier 3 city. And so I would actually want all of you to address this. But first, Arihant, like how are we kind of imagining to get the credit at that level interior into the country and both the socio-economic ladder. And the second part of that question actually is that how are we solving for the consistent problem that we have heard is actually of collateral, of trust, of not knowing enough about the customer and informality of it. How are we solving those things?
Sure. I think there's a very interesting topic, I think, in the industry, specifically if we talk about the strata, which is a very small MSMEs, right? Let's say if you talk about tier 3, tier 4 towns, there are a lot of SMEs, which doesn't have access to a lot of formal credit. And I think Rajat have bring that point very well, that ultimately, to underwrite them effectively, you need to have some data set, through which you are able to decide either the intent or ability to pay off a customer. With this particular SME segment, it's very difficult, to figure out a lot of things from a traditional banking, because a lot of these SMEs may not have the traditional banking, flows in terms of which is needed for underwriting. So I think with the kind of new data set which is arriving in terms of transactional data, by using different digital footprint which is getting generated, like Vyapar, as such, like the people who are using that, they are generating a lot of digital footprint, which is now getting available. So to do the underwriting policies on that, to innovate on that particular data and make the credit accessible to that audience is something we are working upon. And I think that is one layer. More and more data layer, more and more data footprint, digital footprint, more and more people start coming on these platforms, start using these platforms to their core business need. And again, if you see the whole loop, it's a complete loop which is getting created. It's satisfying the needs of this SMEs in terms of their end-to-end or day-to-day business transactions, as well as this data is a rich data for different lenders to consume and to decide the credit worthiness of this user. So like with this digital adoption of this this particular category of apps will definitely bring a lot of comfort and a lot of confidence in terms of underwriting this segment as well.
Interesting. So Kushal, you are at the helm of one of these apps, and you are actually helping get a lot of MSMEs get credit through this way. What are the various kind of bottlenecks that you still see happen? One of the biggest issue has so far been that with enough data you get enough credit, and with enough credit you get enough repayment behavior that lenders get comfortable. So that is a cycle that you want to kickstart. But is there a cold start problem that you see there?
See, Mike, I think especially because we are referring to the whole sachetized, the small ticket size loans, right? I think I see the entire process in four different ways. One, there is the credit product, which banks and NBFCs have created, your term loans, your credit lines, and all those kind of things. And your other side of the action is the distribution, which is something that platforms like Vyapar can solve and have solved for to a good extent, right? In the middle is where you have two different things. One is how are we assessing, in the sense the underwriting methodologies that go behind assessing this MSMEs, and the process, the still financial process of assessing and disbursing the loans and everything, right? Now, the things traditionally, if you look at any financial product, the products are pretty much standardized underwriting methodology, the GST methodology or the banking methodology. Many of those things are pretty well understood. So the industry has traditionally been focusing on the distribution piece. How do we get distribution in place, and how do we make that process seamless? Make the returns better, make the process efficient. The moment you go to the sachetized kind of products, you actually have to rethink the product itself. What is the product that we actually can now offer, given that there are platforms like Vyapar, there are enablers like Finbox in place. What are the new products that now need to exist in this ecosystem? And more importantly, now given the fact there are many other data points that are coming in place, how do we build some policy around that? See, I can completely empathize with the lender, because they are deploying the capital, so just tomorrow, because there's a bunch of data point coming in, they can't just jump and say, we are going to start using this, right? So the idea, the responsibility lies on both the platform as well as the lender to understand the data points that are getting generated, to prove that there is a correlation between this data point with either the character, the capacity of the business to repay certain amount of loan, and to prove over a 6 to 9 month kind of a time frame that this products work. I think that's where platforms and lenders especially have to work very closely. I don't think a lot of data is existing as of today, but I don't think it has been consumed very thoroughly as it can or it should. But because I think everyone is trying to understand how to build around this. And the fourth piece that I mentioned is about the operation, and I think this is where Finbox, platforms like Finbox have done a fantastic job of making sure the barrier of assessment, the whole investment that goes in acquiring a customer and assessing the customer, that barrier has come down drastically, not only in terms of cost, but also in time, in terms of the efforts required by the platform, the lender, to make sure this process goes through. So there as well, with different products, different kind of processes will need to exist, and that's where platforms like Finbox can definitely play a great role for both platforms like us as well. So that's how I look at it. I still think there's a lot of work. I mean, distribution wise, we are learning. We are trying to make sure it goes to as much the right people as possible. But I think in all those first three, creating the right credit product, creating the right underwriting methodology, and hence the right operation to support this too. I think that's where work still needs to be done, and I think I would like to believe that the three of us are working towards that in a way to address this whole credit problem.
Absolutely. Kushal, could you just give the audience a sense of what kind of footprint at a higher level is captured by, say, an app like Vyapar, so that people get like a overall feel of what we're talking about in terms of digital footprint?
Sure. So just a brief, so Vyapar is basically a billing and accounting app, right? It's used by about 9 lakh active MSMEs across India, across various categories and across all kind of entities like retailer, wholesaler, service, business, manufacturers, with the primary use case of billing. So everyone is basically selling a product or service. So billing comes as the first national use case. But apart from that, managing the inventory, managing the payables, receivables, generating business reports, these are all the various use cases, right? Now, the moment I say billing is a primary use case, a lot of our audience tends to be either service professionals, but majority of them tend to be traders, which is your retailer, wholesaler, distributors, and even manufacturers, right? Now, the data point I'm talking about mainly talks about how much. So, if I'm a business using Vyapar for all my billing needs, the data point you're creating is eventually what is the kind of sales that you're doing on a monthly basis, which are the kind of items you deal with. Eventually, you could also say that which parties do I deal with, all those kind of things, right? Now, the challenge I would say is, first of all, this data is not ours. This data belongs to the customer, right? And we are the custodians of the data. So now, for the responsibility, the onus lies on us to create certain offerings for the customer to say yes, please, if you can give me this particular product by in exchange of certain data points that I'm generating, why not? So what Vyapar's responsibility when it comes to credit program comes to is making sure there is permission data that is being taken from these SMEs while creating products which are relevant and useful to them. So I think this trade-off, if you want to take something, you have to give them something as well, and that's what we are trying to do. But broadly, just coming back to your original piece, we generally tend to get a better sense or an earlier sense of the size of the business or the trend of the business's growth much before a GST filing or even an ITR filing can show. I think that's one of the things that we could help lenders with when it comes to assessing this kind of audience.
Super.
Sounds good. I think Rajat, since we are at Finbox are in the business of both building those data bridges and also adding that intelligence on top of the data to make it useful for the lenders and anchors, I would like to kind of know from you what are the things that you're most excited about yourself when it comes to taking the next big leap and making sure that everyone, actually the MSME that deserves the credit the most, gets it. Like what are the big things that you think are coming up ahead?
I think what I'm most excited about are not new things. I'm sort of excited about essentially smoothing, what we already have, because ultimately this is, you can think about an app like Vyapar, which is 9 lakh MSMEs, and a lender like IFL, which has the risk appetite, etc. And like the bridge like Finbox has built between these people. And I think we've just sort of proven the use case at meaningful scale, but there is a long way to go, right? The potential is immense. And ultimately, the use cases are also immense. So if I talk about, say, certain things that we want to really get right is, of course, tailoring the right credit product, personalizing it, surfacing it at the right time for on the users, bringing them, making it very, very seamless for them to actually access it, making it ultra seamless for them to get a larger credit if they have successfully repaid, their previous loans. So these are things that seem super simple, but in the background they require immense work on from all sides, from all parties involved, with very, very smooth technology processes, and customer support service as well, right? Which is stuff that I think, as the ecosystem is new and maturing, is learning how to sort of do it in a way that is very, very seamless. We're moving very fast towards this, but I think there is a way to go here, because it's a 3-4 party sort of transaction. There's the borrower, there's the Vyapar app, there's Finbox, there's the lender. All of this, sort of over time will get smoothened out, and as that reaches that smoothness, right, this can very well explode into becoming one of the largest channels where lending happens on the digital side. And we are definitely seeing those signs, and we have to work very hard to get to that point very, very fast.
Actually, if I may, Rajat, I actually have a counter view out here, right? I agree with you that the processes are the harbinger of growth when it comes to credit distribution, but that probably tends to be the case when the product itself is pretty understood and standardized. A lender understands it, the borrower understands it, the platform understands it, right? I still think, the when it comes to the sachet, especially I'm referring to the whole sachet as the products which reach to this MSMEs. I still think we are not there yet. We don't have a ready solution that works, which the idea is just to take it to more people and do it much more efficiently and have smoother process. I still think, so I would rather focus on the commercial value to the seller, the buyer, the lender, and the platform. When I say commercial value, I'm not talking about the rates and all those kind of things. I'm just talking about what is it solving for them. I still think unless we have a product which is very clear in everyone's mind that this is something that solves for this X, that's when we just focus purely on the efficiency, the processes side of things, wherein we say, okay, now we need to scale and let's just ramp it up and make it as easy as smooth as possible. But I still think we still have those problems to solve for. There are no very easy products to just say and say this is what will work and this needs to be taken to market. I think we're still some way from that, in my opinion.
No, absolutely, absolutely. I think I will call that maybe product innovation, and I think that that's definitely a platform lens that you are wearing, and we would love to get the platform's views on on what the direction is in terms of products, and make it easier for the platforms to maybe experiment with a bunch of products over time to get to the sweet spot. And hopefully we can sort of, as infrastructure and as lender partners overall, hopefully we can make it easier over time to do these or run these experiments, which will definitely gain a lot more overall borrowers, users, etc., who can benefit from these programs. We definitely want to get there ASAP.
So
Absolutely.
I also just wanted to add, I think this is an interesting thing. Maybe just wanted to add one more line over there. So I think it's all evolution, which is needed for the product, specifically for the segment we are talking about. That segment is not a segment which has been serviced by a lot of people in the market, right? So again, I think, but the direction, the way I see it is, at least we are generating and we are onboarding few of this customer. There are a lot of digital footprints which is getting generated, a lot of understanding of funnels, how people are adopting this product, how they are behaving from a risk point of view. Is this data having a right correlation or not? A lot of times it's more of a hypothesis thing, in the market. But when you onboard them, see their performance for 6 months from a risk perspective as well as from an onboarding perspective, at how they are behaving. Maybe you need to have a different experience in terms of customer support, etc., for this kind of an audience. So I think I agree in a way to the point which Kushal is making, that yes, I think still that that moment that yes, we have figured out a right product fit. Product market fit is something still yet to come. But I think we all on here, Finbox, Vyapar, Fireful Finance as such, is on their way to find that right product market fit actually.
I think, in fact, I think that's one of the biggest in our conversation with many of the banks and NBFCs. I think that's one of the biggest change I've personally seen. That what this segment used to be like, this segment will never work. That used to be the attitude, but now everyone is just trying to figure out what it will take to make this segment work. I think that fundamental shift has happened for sure. I think every bank, large bank, small bank, large NBFC, small MNC is now actively looking at this. They are on the fence, but they're still actively looking at it, which wasn't the case a few years ago. I think, in my opinion, happy to see this kind of a change, and I'm hoping in the next few years something will come out of this.
Yeah. Agree.
Of course, it will. When everybody wants to innovate in a direction, I think it always it takes time because it's a complex problem. But I think it always is, something that keels over eventually. So yeah, we're optimistic folks, and we'll definitely, keep at it until we get to the solution.
Yes.
Absolutely. I think one of the things that I would like to mention is that the recent CIBIL report also that we saw on the MSME space showed us that there is now the MSME demand is 2x, and now this is the first time that in my 8-10 years of tracking this that I've seen the lending actually has matched up. The dispersal have started to match up to that demand. It's actually not that MSMEs are knocking the doors of formal credit and they're not getting in. So lending is actually improving to the sector by leaps and bounds. 24%, I think, over the last year it has improved. So my next second thing that I actually also want to call out actually is the thing that Rajat wrote in his newsletter a couple of weeks back about how for platforms credit being able to offer credit can actually be a push for MSMEs to digitize faster, because it can work the other way around as well. So it's not digitization leading to credit, it's actually availability of credit could also lead to faster digitization. So when we see both these things together, Arihant, I think one of the things that I would actually want to know from your perspective is that are there specific products that you think are actually going to be the most potent when it comes to kind of bridging the MSME credit access gap? Is this like a B2B BNPL kind of a product, or is this a credit line, or is this something more mainstream like a term loan? What are the things that you think will actually make all the difference here?
So, okay, the way I look at it is like the market is huge, okay, and if you just try to slice the market, there is a need for each of this product. And again, I think one of the beauty of this segment is there is a hyper personalization which is needed, which no one actually have cracked that yet. There are different types of SMEs which need a capital for 7 days. There are SMEs who needs the capital for 30 days, right? And there are SMEs who need it for 1 year because they know their cycles well, right? And so as far as I see it, honestly, that I see that there are segments which needs a BNPL kind of product. Like instantly you give them a money, the settlement happen in 3 days, they will be back again with paying that amount back, right? There are that segment as well. However, there are some people who has a seasonal businesses. They see the need on particular season out there, and they take the money, use it for 3 months, and they say that fine, we are able to increase our business by taking this capital. So, and the real intelligence, I think, and that's where that's where this whole combination of something which we were discussing, that lender, the platforms, the technology platforms, and the digitization apps, which is coming in for SMEs, has to come together in a way. Again, that's going to the same point actually, that how we can use all these data points. And I think Kushal mentioned one more point, that though there is a lot of data, but no one have actually really gone deeper into it to understand the need of it. But as far as you mentioned, that there are two things, right? One is bring people more and more digitally on this app and then enable credit for them. There are segments where we have to experiment, enable credit for them, and then see how that performs. And that is a learning cycle over a couple of months as such. So honestly, from my experience in last couple of months, we have seen there is a demand for a small ticket size product as well. Like if you talk about 30 days product, 60 days product, and this particular phenomena was very heavily dominated by the consumer lending industry. If you talk about the quick checkout platforms, right? But now SME also feeling the need of it, and I think numbers speak for themselves. If we see the number of fintechs evolved in last 1 year in this particular space of B2B BNPL or B2B credit line, are huge, right? Which we have not seen them earlier. So again, I do see that there is a, like in summary, there is a personalization which will needs to be done for each of this specific segment, and the need for all this business remain true. Even if you talk about term loans, which is a traditional product since ages, that still holds true today, right? There are a lot of business happen on the term loan as a product as well, though the fancy products are coming in the market. But still, I think the phenomena of the term loan still holds true for a big segment. Along with that, of course, this new product and the innovation needs to be fast enough to bridge this gap as such. So that's how I see it overall.
Great. That was actually very enlightening for me to also learn that I think there's space for everything to survive. So I think that bodes well for all of us to go in the long term. Kushal, I would actually want to double click on this product piece. And, since you have always been a very big, supporter of the idea that we need to acknowledge the heterogeneity of the enterprises and the various credit needs that they come with. What are the ways in which that you see business owners kind of fulfilling their credit needs right now when there aren't very many products available for them in certain spaces?
Okay. See, the whole idea was this MSME, the catch-all phrase, which encompasses all the non-enterprise businesses, right? So your M ka definition, I think officially some and businesses who are up to 510 CR worth of assets or something of that sort, which is like 98% of all the MSMEs out there, right? Now, from what our experience, right, what you've seen is, and this is not generally true for everything, but overall, as compared to other SMEs, so these are the exact entities which many times lack business proof. Which, if they have business proof, they don't have the vintage that a bank or NBFC would ask them to have. They would not be eligible, or the rules of GST, e-way bill, e-invoicing will not even be applicable to these guys. So they would not even be doing those things. Many of them would be banks, but bank would be many of the times will be regional cooperative Sahakari banks and many of those kind of entities as well. And most importantly, I think this is one very big piece that hurts us a lot, because a platform like us has customers across the 20,000 pin codes of India. But most banking still happens to those 9, 10,000 pin codes, the major towns and cities, right? I think that's one big difference when I talk about the micro enterprises versus the SME enterprises. So these are the main challenges why even even if they're bank, they have the digital footprint, they might not be serviced by a lender or a bank or anything of that sort, right? So most often these guys are they rely on the supply chain credit, so the credit they get from the distributor to thus do their own business. So there's a strong reliance on many of these guys, on many of the distributor for this piece. Second business, friends and family. They have an investment which they keep reinvesting. So that's how they keep growing if they don't get any external source. And the third thing, they might be accessing any informal credit if they have some really urgent needs for that to do so. But I think in the best case scenario, they are growth. People who are ambitious. First of all, I think that's a big qualifier. People who are ambitious, we might not be able to meet their growth needs by not really reaching out to them. And the worst case scenario, these guys would be pushed off to other non-efficient sources of capital. In either case, it's a problem worth solving for. The same case when I go for SMEs, I think that the problem or the thing to solve for them is very different. It's more efficiency of better quotes from different lenders, efficiency of better processes, faster turnaround time in terms of disbursement, efficiency of platforms like Trades. I think one of the things that you also want to talk about, making sure those more and more of the larger buyers and sellers get onboarded, so that the benefit trickles down to the SMEs as well, right? So the way I look at this micro and SME kind of a ecosystem, the kind of needs that they have, the kinds of things we need to solve for them are quite different. And majority of a business on Vyapar tend to be the micro thing. And as I said, it's funny word. Micro is still people who have up to 10 CR worth of assets, right? And that's where a lot of problems still need to be solving. The ecosystem is evolving over the next few years. I think there'll be an organic way in which many of these businesses will become bankable, just because of the way the government is making certain rules. But I still think there needs to be a push from this whole ecosystem that's representing out here, right? The NBFCs, the platforms, the enablers, to make sure the products and the processes are accommodating of the unique profile of this kind of businesses. That's my takeaway of what needs to be done out here.
Interesting. I think that was very helpful. So let's ask Rajat. Rajat, what's stopping us from building innovative products and doing hyper-personalized credit products?
So yeah, absolutely. So see, this is credit. Anyways, it is, any innovation is sort of constrained by performance of the books that get created, right? So you can't sort of go all out and then really which leads to a lot of losses. It has a learning period, and then it has a stabilization phase, it has a smoothing phase, etc. And typically it requires a lot of different parties to work together, and it is a very collaborative approach. I think only recently have these collaborative approaches and the sort of middleware infrastructure emerged as something that is enabling this together. And we have all of these guys here together in one room. Typically this never used to happen, right? And this is now happening more and more frequently, and people are trying to isolate and figure out these problems very, very quickly. So I think we are super sort of optimistic that this will happen. Another piece is that overall lending anyway is also regulated, right? So essentially there has to be in a way, there are constraints from the regulator. There are a lot of data protection, data privacy, all of these things that are hygiene and need to be followed, and shouldn't be, in a way, it should never be taken lightly, because lending is a very serious activity in the economic life of a country, and it is very well watched over by various regulators, and sort of is of interest of everybody, in from the macro to the micro. So this is something that needs to be done, and it needs to be done fast, but it shouldn't be fast and loose, right? So it needs collaboration, it needs discipline, and it needs adhering to the basic hygiene of building this, because it has a deep impact on both the sort of the end borrowers, but also the entire finance ecosystem that is very, very prized by the country and the regulators, right? So it will accelerate, but it won't go crazy, I would say.
Right.
I think that's the
I
biggest
guess.
difference. I think, I think that's the biggest difference we see, when we talk about fintech and all the other tech of e-commerce tech and other platform plays, your taxi platforms and everything, right? Wherein scale comes first and, the optimization comes later. I think this is the biggest thing. I think you've rightly, pointed it out. Here, the economics and the regulatory, compliance has to go hand in hand with the scale. I think that's where the natural growth rate for something like this will never be as, explosive as, what we've seen in other platforms. But I think, as I said, as you in fact said as well, right, optimism has to be there, and that will definitely lead the way.
And there's a lot of data supporting optimism. I think it has improved markedly, and it's the growth rate is only accelerating. So this is something that will continue to happen as hopefully the ecosystem crystallizes around all these new ideas.
Absolutely. I think I think the main takeaway from what Rajat said was that, all three different parties, which would earlier be like now in silos and not talking to each other, are right now in this room and, having this conversation, and we are building products together. I think that's one of the biggest takeaways. And partnership actually as a concept has become a fairly like an important piece for all stakeholders, right? And especially lenders, I feel, Aryan, because I was reading a couple of studies the other day, and it said that about 60 to 70% of lenders' books are supposed to come from partnership lending in the next couple of years. Optimistic as it may be, I would like to hear your thoughts about the lending version of partnership, which is co-lending, right? And I think that is where a lot of industry action is being seen right now. So how do you see that happening? How do you see that evolving for an MSME lending, and especially like small sachetized credit? Like, how do you see co-lending happen there?
Right. So so a lot of traction has been seen on the co-lending piece as well. If you see, even for a secured product, now it's for unsecured product, and specifically for this kind of segment as well. However, whenever you get into this kind of a co-lending arrangement, and I think Rajat has put this very well in terms of that lending is a serious business, right? It's not something which is can be comparable compared to other businesses. Now, when you do that, you have to maintain the regulatory compliance and of course the asset quality, right? So given all this in play together, a lot of co-lending arrangements are happening, a lot of partnerships are happening, and a lot of growth coming from this partnerships, given there are set of customers you can find with these partnerships easily, right? There are a lot of customer who is using the core product, and you become an enabler of credit by leveraging the data, by leveraging the underlying trust particular customer have that with platform. So all these things come together, of course, give a lot of comfort to the in the market to get into this kind of arrangement. And that's where you must be seeing that a lot of news articles, a lot of publicly available information is something talking about that co-lending piece is something which is taking a lot of great heights in this particular segment as well. However, to create a sustainable ecosystem around these partnerships, etc., the focus and the ownership of underwriting this customers, maintaining the asset quality is also something very supreme. So basically, while we innovate, but we have to keep this whole points in mind, and this will help in scaling up this partnership to a greater heights.
Got it. Sounds good. I think I would like to now hear from Kushal about this piece, and ask specifically, Kushal. Let's talk about the asset quality for a bit. In a sense, what is the way in which that you look at at your asset quality, or what are the ways in which that you track it, and is there a collection strategy, or is there a way in which, is there a hack that everyone else is missing? Is there some secret that you have, or have you noticed that works best for MSMEs?
Yeah, so I'll tell you what our experience has been, right? In terms of how we've grown the book and what are the kind of users we are onboarding. See, now the biggest challenge, with all sort of assessments is, how do we tell the good from the bad? How do we tell the savvier from the not so savvier, right? I think that's where, at some level we do have the organic advantage, because anyone who uses our application for billing, his customer, and, who has a desktop at his shop, for billing, he has multiple users using that particular application for billing, right? There's a certain filter of the kind of audience we have in the first place, right? So at some level, without getting into, many of the other data points, the cohort itself has certain characteristics which are more affable for a lending program. That's one thing, right? Now, and given now, let's talk about the products that we have been running, right? Like a term kind of product, right? Now, these are very focused on distribution, but more importantly on the conversion funnel. Now, again, out here, given the fact that we do have a slightly digital savvy audience as compared to the rest of the MSME market, the conversion funnel tends to be a bit better as compared to what you would otherwise see. Just having an average MSME go through a purely digital funnel, right? So I think some of the platform level filters have worked well for us. And given the fact that our audience slightly tends to be a bit more conscious about the kind of product that they are going for, so the understanding of the credit, the impact it can have, defaults can have on their profile and everything, is also a bit high. So we've seen very, very promising results, be it in terms of conversion funnel or in terms of the default numbers. I think Aryan could better talk about that. I think so. One of the things that we undecidedly did, and that what many others could look at as well, is it put a filter on the platform itself. The platform and the use case for which you've acquired the customer. If you have a use case wherein customers are just coming for a certain transaction, just one transaction, you basically have the average MSME portfolio out there, right? You just have access to those guys, but you have no idea about the characteristics of this user. So I think one of the things, and I think at some level Aryan also pointed it out, right? The way our user interacts with us, and the way our user retains with us as well. Those are two very important points that has worked in our favor for running our lending program. And we definitely plan to go deeper into understanding those pieces and figure out how can we do even better from here. That's one thing for sure. And the other piece we are constantly trying to figure out, right? Because see, we know how our users use our products. So even we are trying to figure out that what all the other various behaviors and patterns around which we can create an hypothesis and work with the lender, create custom policies, test them over a period of few months, and then see if you want to scale them or not. So we are constantly working on those tweaks and those optimizations as well. So broadly, I would say number one, play to the strength of the platform. The use case for which you have acquired and retained the customer. And second thing is keep experimenting. I think running one experiment and 6 months down the line, figuring out, oh, this doesn't work, then you're again back to the square one. So I think you, at any given point of time, you need to have at least 2-3 different experiments to see what is going to work and not work. And I think that's where most of our focus and energy is currently, invested in.
Excellent. I think that is some of those real world insights that I was looking for. Thank you so much for that, Kushal. Rajat, in fact, we at Finbox have a collection specific product. We have CollectX, and we've seen some great results for lenders around that. So would you like to kind of elaborate on just how that works and how technology can kind of help solve this problem?
So given the fact that we have our users on the applications, right? So okay, let's look at how lenders typically go for collection, right? There is a soft collection process in which there are nudges, there are SMSs, the calls, IVR calls, manual calls, and then there is the field collection, the hard collection, wherein someone goes to the business and go for collection, right? Now, how this could work differently for a platform such as Vyapar is the fact we have another channel. the user is on our application, he's using our app, so be it push notification or be having hard notification inside the app, those kind of things you can do. But I would not say that is going to be a game changer. That is definitely going to increase the efficiency of collection. So what would come otherwise in 20 days will probably come in, let's say, 12 days. But I don't think that's going to be meaningfully changing the collection behavior of the entire book, right? So for collections to be much better, there has to be a very good commercial hook for why this user has to pay you back. He can default anyone else he wants to, but he has to pay you back, right? I think those kind of collection hooks is something that you would build in. I think so that commercial value of why a user should pay us back, I think we have some ideas we are exploring on and working towards. But just having another communication channel with the user, which we already do, I don't think that's going to meaningfully make or break the the program per se. We need to create some unique value, and which we are currently working. I don't claim we have that. We do have some advantages in terms of the selection of the book, but I still think we are figuring out a way of doing job better when it comes to assisting the lenders for collection piece as well.
Got it. Cool. Rajat, would you like to talk about Collectex and the results that we have kind of seen with it, and what are the ways in which lenders are utilizing it?
Cool. So one piece is lenders have used what is called an early warning system, right? And there are a lot of different ways of sort of building an early warning system. And our product is called Collectex, and typically what we do is we sort of use in-device intelligence to figure out, basically, and machine learning to figure out who should be targeted for collections and who shouldn't be, and that enables people to build big optimized workflows. So looking at it from a lender's perspective, they have a very large portfolio, and typically to prioritize which cases to work on, which not, it takes a lot of it creates a lot of value, and that is what we do with Collectex. And we are sort of continuously trying to build on it. There are newer data sources that are being added, more machine learning models that are being tested every day, and we make this better and better. And we collaborate with a bunch of lenders to sort of really figure out what how to improve on this system, because collections is a very big cost for any lending sort of program overall. One, it is when a case goes to hard collections, it is it is causing a loss on the book. Second, it is also causing an additional cost of recovery, which is operational cost, where you have to pay to either the call center or to the agencies or these people, and this is not typically a pleasant experience for anybody involved, right? So it needs a lot of softer optimized touch, using sort of more intelligent methods of doing this, and maybe also improving the user experience of collections. And I think the Indian ecosystem has come a long way, where a lot of these intelligence products are available. One of them is Collectex, but also newer collection CRMs are there, and then there's a bunch of work happening in this area. And this is a very, very mature area in developed markets, right? So we feel that there's a lot of innovation left, but we are very excited in terms of the results that we've gotten on consumer lending portfolios. And essentially, what are called blind debits are, I think, 3 or 4x more successful with Collectex. And then we can dive into more details at sort of offline, but there's a lot of jump in terms of operational efficiency that can be seen, and over time, hopefully we can add more and more, and get this sort of going better for customers that we work with. Yeah,
brilliant. I think so. Just a timer check. We are in the last 10 minutes of the webinar, so anyone who's been watching, please feel free to post your questions wherever you're watching, and we'll take it up with this panel about MSME lending. And I think it will be unfair to not have a lender actually talk about this. So Arihant, very quickly, you have heard both sides. You have heard what Rajat has to say about technology, what Kushal has to say about the platform and knowing the customer. what is your view on MSMEs specifically? I want to talk about MSMEs and collections. How different is it from consumer collections? Because I feel that's a place where everyone struggles.
Yeah, so see, collection in a way is a core of lending, right? So you talk about any growth in lending, it has to be kind of backed by collections, right? So collection is core in a way of any lending unit, whether you're doing term loans, BNPL, etc., right? And of course, there are a lot of products, collectex as such, along with. Of course, there are a lot of innovation happening in that market as well. Like if you talk about the collection CRM, also there are a lot of things where people are trying to bring all the communication of collection centrally, right? So that you can use that to the fullest, even to improve the customer experience, right? So one area is collection, right? Other area is the customer who can pay well. Why you have to remind that customer again and again, right? That customer is a regular payer, but you have to figure out that trends, and that can only happen when you have a platform which gathers the digital footprint around notifications, SMSs, etc., etc. And of course, there are a bunch of platforms of this sort in the market, and we are definitely consuming these platforms to build this digital collection footprints as well for the user. When it comes to other innovative product which help us building early warning signals, so they are also we are seeing a lot of traction in consuming that products as well. Along with one more angle which I wanted to bring, I think which Kushal was also bringing for SME. I think one thing is you bring a customer who want a loan. Second versus bring a customer who is using one platform and want a loan. If you see, the end goal for both this customer is same, that they both want a loan. However, when you see a customer who is using one particular app for the day in and day out transactions and want a credit, your your trust with that customer, your confidence with that customer goes little better, I will say, compared to the customer who is coming, because you have not seen that kind of a digital footprint. So like for example, if any SME want a loan and they are using one platform for doing a day in and day out transaction on an app, and you are seeing that okay, they are live since last 12 months, they are generating invoices, they are paying bills, etc., right? And that customer at some point of time want a loan, right? So now if you see that cycle, right, that cycle from the origination, gives a lot of confidence. And when you and just trying to stitch two things together, when you see collections is not never a silos activity. It has to be the loop from the origination until the collection. So if you see the whole loop as such, when you acquire this kind of a customers which are using the platform for their day in and day out needs, and then you are putting more and more filters out there and more traditional and non-traditional approaches of underwriting, and when you bring this kind of a customer, of course your collection cycle also start talking in a better way compared to the other pools, right? So the way I look at collections is like not a silos activity. It has to be in talking in terms of your origination, when you originate this set of a customers and the segments you are originating, definitely. So in nutshell, in summary, if I look, the approach which is right now is being getting a traction a lot in the market is to acquire the set of customer who have an intent and who are showing some business footprint. It's very difficult, to get that business footprint from other data sources. These are the main data sources, and that's why I'm harping and I'm just bringing that point again and again. And when you bring that, you actually create a lot of trust, a lot of engagement activity with this customer, and there is an intent always to pay because they have some businesses running in. It may be a delay, they may pay let's say a EMI late, but their intent is to use the platform and to run their business on day-to-day basis. So in that way, I see that stitching this whole thing together from origination till the end collection point will help, and will help in sourcing better, in help in managing the asset quality better, and of course in turn scaling the businesses much more faster. And that's where the role of Vyapar, the role of Inbox comes into a play to stitch this together along with the lenders to give the holistic experience for the consumer as well as for the individual parties. Yeah, so that's a little long answer, Mayank, but I think
No,
that's
absolutely. I think as much detail as possible. We rarely get to hear from from the lenders and the platforms like this with this kind of candor. So it's always welcome. I think we are very close to our timer on the clock, and a couple of us also have other meetings to drop into. So quick thoughts, quick ending thoughts, and I would want to first go to Kushal, and Kushal, I would like to hear from you about the whole language piece. I want to like just understand if you can quickly just wrap up your thoughts and tell us about how important is the language barrier. Do you think is that whole English Hindi divide thing still true when it comes to digitizing the MSMEs, or is there a regional language barrier as well?
Well, see, at Vyapar, we have been, we have customized the app to be used for English as well as Hindi, right? Now, the thing is, when it comes to e-commerce, right, wherein a lot of, localization has happened, and when it comes to other content platforms where a lot of localization has happened, the thing is, the use case over there is very different. The audience who talks in, let's say, Tamil, probably wants to consume content in Tamil. But the thing when it comes to things such as accounting, right? Many of the terminologies of TDS, GST, invoice, bill are pretty much well understood. So we do still, issues when it comes to people wanting to apply for a loan and they want someone to speak in Tamil or someone to speak in Malayalam or something of that sort. But I would broadly say and localization definitely will add value, but I think there are much other value additions that we need to do before we move on to the optimizing the language understanding piece of it. That's how I currently look at it, and I think so. Just to give an example, Vyapa has Hindi and English, and even Hindi, which is typically one of the largest speaking user base. The people who use the app in Hindi is high single digit percentage as of today. A majority of them choose to use the app itself in English. A lot of accounting, credit, and even insurance terms are actually well understood in English as of today. That's my understanding. Not discounting the fact that localization can have its upside, but I think there are a bunch of sourcing, underwriting, process, collection problems that we first need to solve for before which we say, okay, we need another 10-15% bump in how we are doing things, and that's where probably I would push my thoughts to localizing things. But right now, I think we are good. Fortunately, India is one of the highest English-speaking nation, and especially when it comes to terms related to accounting, they are well understood. A Hindi guy would still spell it invoice just in Hindi lipi, but a lot of them still use bills and invoice and all those kind of things. So I think that's how I look at it.
Sounds good. I think that has been a good chat overall. I think we've covered everything from acquiring customers to talking to them and the languages they speak and the languages lenders speak. Rajat, any final thoughts before we wrap it up?
I think I would just want to capture the optimism that we have overall in this collaboration, and how much time a lot of people uh, will not know that Finbox at least has been at it for 5 years, and overall the overall fintech ecosystem has been sort of trying to build a collaboration with the finance side for over, I think it sort of broadly started in 2013-14. So now it's sort of touching 8 to 9 years of trying to collaborate, and I think it's finally happening. And this is this time is incredible, and overall a lot of new things and new experiments are being conducted. We're very optimistic overall, that coming together we can really tackle this problem and overall create some impact that benefits these MSMEs, which are after all the backbone of the economy of India. So we are all optimistic that we will be able to play our part in creating some meaningful impact. That's about it.
Great. Thank you so much. Thank you, first of all, to our speakers for joining us. Thank you, Arihan. Thank you, Rajat. Thank you, Kushal. This was very enlightening for us and very interesting for me. And thank you for all the viewers who have joined us and seen this. And
Yeah, Arihan, parting thoughts are left.
No, I think mostly it's covered. I think from both of you. So I think same here, Rajat. I think as you mentioned that a lot of optimism is there in building this up and to scale this up going forward. A lot of nuts and bolts are being put. Now it's all about just tuning them in a right fashion that it start sounding for themselves in the industry. So I think I believe that we are on the right path. It's just about tuning in them more and more and to arrive at a right fit. So yeah, looking forward for that. And of course, with just last line, that it's going to be fantastic time ahead for this particular SME industry, and we are definitely looking forward for it. Yeah.
Super. Thank you so
Absolutely.
much, Aryan. Kushal. Thanks, man.
Thank you everyone.
Thank you guys, and thank you for all the viewers. And please do find us on YouTube, and please find Finbox on YouTube and subscribe, and we'll do a bunch of more of these webinars coming up. And I guess I will just close this by saying I think the portrait looks beautiful. We are just figuring out the pixel, and we'll get there.
Great.
Cool. Thank you guys. See you.
Thank you, guys. Thanks. Bye.